This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 2/5/21, and this is show number 202. Well, Nick, hey, everything's fine. The Russell's up, so we just keep going long, right?
That's kind of the story at the moment. We had a little bit of a scare last week. The markets had that pretty good sell-off, and we're right back to a buying frenzy. But just to put things in perspective, anytime you have a strong trend like this, the first dip is always a buying opportunity, usually. And this is not unusual to see. So now, you watch the market, you look for clues, but the Russell 2000, which represents small cap companies in the United States, as long as the small caps are rallying, it's a good sign that the markets can continue to move higher. Now, the Russell 2000 is a great leading indicator. It was really for a long, long time, and I think it still is. So just keep an eye on it. If you get a high volume Russell reversal day, that's kind of the market's way of winking to you, telling you, hey, maybe things aren't so great. But until then, you keep the music playing, the DJ's in the booth, and the party goes on.
And the drinks are being served. The Kool-Aid is being served in epic amounts. God only knows what's in it. Eventually, that Kool-Aid's going to kill you, even if it isn't spiked the way they did in Jonestown. Just the chemicals in there are bad for you anyway. It's just funny because last year, right around this time, Nick warned us about high-volume reversal day on the spiders. And I think it was January 16th or 19th, and again in February. Yep. And like clockwork, the whole thing unwound.
Yeah, the whole thing unwound. But again, January, just to put things in perspective, is a very, very tough month because you have a lot of people carrying over equities from the year before for tax reasons. You have selling going on in certain places in the month of January for people trying to rearrange their portfolio. A lot of money managers are trying to rearrange their portfolio, get out of certain sectors into different sectors. So there's so much that goes on in the month of January. It's always, always, always a tough time to really predict, but it usually gives us at least one flush or one sell-off. And then the markets rally back up into February as everybody thinks things are good again. And that's a classic what we're seeing again this year. So, I got the caution flag out for all of my members. They already kind of know what I'm looking for. But overall, right now, things are moving up and we'll respect that. You always want to respect the trend. The trend is your friend, except at the end. And, I'm watching numerous things out here, but we just let the markets guide us. And, we study the charts each and every day and we watch all the different industry groups, and that'll tell you, when things do come to an end. But I would just say to everybody, even now with the market rallying, you want to be cautiously optimistic if you're a long or a bull. And if you're a bear, you still got to be careful because these things can squeeze higher than most people think.
Hey, so cautious optimism is the byword. And remember, if you've got profits, there's nothing wrong with taking money off the table. Every winning trade that I ever do, I always try to take some of the money and just take it out of the market. That's just me because I've been burned multiple times in the past, starting in 99 and 2000 and 08 and 09. And in 11, I managed to take all of my mining company profits off the table before that sector crashed. And it was just fortuitous. I needed the money for something, so I sold them all off. I didn't sell off all of them, but in one account, I liquidated the entire thing. And that turned out to be the right move.
That was the right move because 11 was really the peak, September of 2011 for gold. But one thing you're right about, and I'll agree 100%, is you want to take some profits. One of the ways that I do things is I like to take 2 profits. I like to take first profit when we hit my initial target. I take half off the table, and I let that second half run with a break-even stop. I, in fact, did that today in Bullseye Trading at my program there. I took a 4.5% gain on an equity today. I locked in the profit. I moved my stop to break-even. Hopefully, it goes up to my second target. But if it does come back down, I'll get stopped out with a break-even stop on that second half. But I initially made some money on that first half, and that's always the goal. That's how I do things. And I've done that for years and years and years, and been pretty consistent at it. You're not going to win on every trade, but you want to lock in those profits when you get them, and then you're playing with the house's money for the most part. You let the second half go.
Hey, well, how many times do you hear people tell you, especially when they hear what you do? Yeah, I was up like 300%, and then I wound up losing money. Now it's just like if you're in the casino, like the odds are against you for sure, unless you are a card counter at the blackjack table or other methods that aren't approved of by the casinos. But whenever you're up in the casino by any meaningful amount of money, you should always take that money off the table and cut back.
Well, at least take your initial stake off the table and let that second half ride if you want. That's fine. I look at the trading businesses. I always want to have the odds in my favor, and if I don't, I actually know where I'm wrong, and I have a stop in there. If we close below that level, whatever time basis I'm using, I get stopped out, I move out, and believe it or not, that's the ultimate insurance policy, because when things move against you and they take out certain levels, that could be a real sign that there are problems in the equity and you might have misjudged it. Or just say, for instance, maybe there's something wrong with the company that wasn't wrong a week ago, but it's wrong now. So, always know where your mistake is and have a stop loss. You don't have to enter it into the market. I would never tell anybody to enter into the market, but mentally have a stop loss where you say, hey, I just got to cut the position. And I'll be the first to tell you, that was a hard thing for me to do early in my career. Once I adopted that policy and I don't break it, things really, really flourished, and I was able to really become successful in this business. And don't be afraid to get out of a loser. You got to think of trading or a stock is like an employee. If you hire somebody in your business and they're just a terrible employee, why would you keep them around? That's costing you money. There's no productivity there. Why would you want that employee to work for you? So a stock, in my opinion, is an employee. Stock doesn't work for me. I'm just going to cut it and, take my loss and move on. And then we find another one.
And what you're really saying is don't let your emotions override your reason for this stuff. And hey, so payrolls are heading back higher. If you can believe any of these numbers, we had a job report with a gain.
Yeah, you had a gain of just 49,000. I mean, that's peanuts, really, when you think about it. But the expectations were only for 50,000, so it was pretty much in line. And then you had the January unemployment rate at 6.3% versus 6.7. Overall, there's still a lot of work to do here, but now we're starting to see, the Cuomos of the world and the rest of these guys are now starting to say, hey, we need to open up. The mayor in Chicago, we need to open up. So, I mean, the political game, I guess, since Biden is in office is now over. But, they've done so much damage. They have no idea what they've done, and they'll find out soon enough.
Yeah, when you look, you see 40 to 60% of the restaurants are gone, which means the companies that supply them are gone, which means that small business in general has probably mirrored the loss of companies in the restaurant industry, because the restaurant industry is filled with small businesses. The PPP helped some people, but not nearly enough. A lot of people couldn't figure out how to get it and ran out. And now all of a sudden they've had an epiphany. Wow, we really need to open up the economy, because if we don't, we could really have problems. I mean, New York City is dead man walking. It's going to be bankrupt unless it's bailed out. The same with New York State. Same with all these other states. They're on the edge of bankruptcy, the exception of Florida, Tennessee, and a few others. Texas, Nevada. Even though Nevada has been shut down, there's still people moving in droves from California. So that means something. And there's no income tax there yet. No state income tax. But all these blue state governors would like to put an end to that. We'll see what happens. In any event, gold and silver are reclaiming some of their losses from yesterday.
Yeah, so today you got a nice little bounce in the GLD. And again, we got an oversold condition. And if you take a look at gold futures, that's a nice little 1.3% bounce there as well. And, again, got a bit oversold and, you're just doing more backing and filling. But ultimately, this pattern still needs some more time before it's completed. And then once it gets to completion, I think, you're going to get a nice pop in the precious metals. Right now, you're down sharp one day and then you're up, nicely the next day. So we continue to see this backing and filling. And I think that's where we are at this stage.
It looks like $26 silver is kind of resistance here, Nick, doesn't it?
Yeah, when you look at silver today, I mean, if you look at the silver futures, they're at 27.05 today. Really the big resistance level on the chart is probably 29 at the moment. When I look at
support. Yeah,
the support would be around 25, 24 and a half. there's very good daily chart support there. If that level cracks, though, then you're really looking more around 22. And then ultimately, I think the $20 level, looks just amazing. If we got down to 20, I would probably have to go out and scoop up another ton of physical silver.
Yeah, I think you're right there. So we're looking at that $20 to $22 range represents a huge buying opportunity.
I think, depending on how this pattern unfolds, like we said, 25 is still a lot of daily chart support, but I like to go off those bigger time frames very often. They give me a better support level. And, anywhere 22 to 20 is just really, really dynamite support. So that's where I really would have a hard time seeing that break in the next couple of years, honestly.
Yeah, sure. I want to run something by you. I did a little research because somebody said inflation adjusted silver should be at $1,000. So that didn't ring true for me. So I go back to 1913 because what that year was the income tax and the Federal Reserve.
Federal Reserve on Christmas Eve.
Yeah, they just snuck it through in the eve of Christmas Eve in the darkness. And,
midnight.
Yeah, midnight, right. So at the time, the price of gold was $20 and change. The price of silver was 60 cents. So let's just say that that's when the modern inflationary age started. Fiat money, eventually everything else. If we multiply, and they say that $1 today is worth 1 cent, it's lost 99% of its value since 1913. So we multiply it times 100, and we come up with roughly $2,000 gold, right? And it's not that far off. Because it's like right now it's at 90 times what it was in 1913. And when we look at silver at 60 cents, if we multiply that times 100, we come up with $60 silver. Now, that's not to say that it can't go a lot higher because we've had so much inflation recently and we haven't seen the effects of it, and they're not really letting us see it. But if we look at real estate, artwork, collectibles, all these things have skyrocketed. So just assuming that maybe because the CPI, Consumer Price Index, is very imperfect. Let's just say $1 worth half a cent of what it was in 1913, and then we multiply it times 200. Then we could have $4,000 gold, and we could have conceivably $120 silver. I'm just saying based on what $1's worth now as opposed to then, and there's a lot of reasons why they're not comparable because of the manufacturing, productivity revolution, computers, everything else. They're not really, it's apples and oranges. But you know what I'm saying here is $1,000 silver is really a stretch.
Yeah, I think it's a stretch. What I would say is, when you talk about a 4,000 gold number, I do think that's really, really possible. 2025, 2026, 2027. I'm expecting these things to go to the moon. Now, how high can silver go? You never know. Usually we look at that 60-to-1 ratio against gold. I think that's been a pretty good number to track it with. But, again, silver has a lot of industrial uses because, it's a lower priced metal. And what happens, people can't use gold, even though it's a great conductor of electricity. They can't use it because it's too precious. So, and it's too hard to get, right? I think we can only mine about a 2-foot Olympic sized swimming pool, 2 feet high a year. So that's not really that much gold when you consider the size of the planet. But yeah, I would say that, $60 silver is going to happen. I don't have really any doubts that will take place.
Just a question of when, but it's going to happen. And I couldn't agree with you more. In any event, have a great weekend, Nick. Make sure you go over to inthemoneystocks.com. Check out Nick's trading record. Like we've been telling you, the trade of the decade and perhaps even more is coming up. It could be a matter of days, probably not more than weeks. You want to find out by subscribing now. Take a look at the Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Send us your emails. We'll get to them shortly. KL@KerryLutz.com. Nick, always a pleasure. Have a great weekend. We'll talk to you on Monday.
You too, Kerry. Have a great weekend. Thank you.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.